All right, well, welcome to the presentation, Simple Seasonal Setups, my #1 chart pattern for trading seasonality. This is Silas Peters from seasonalswingtrader.com, and really appreciate you spending some time with me today. We'd like to go ahead and do a quick sound and audio check. If you can do me a favor, type in Y if you can hear me. Can you hear me loud and clear? Please type a Y. Okay.
I can hear him loud and clear. Y'all good? Everybody good? All right, looks like we got some Y's coming. Okay, all right, yeah, go ahead, buddy, go ahead.
All right. Y. All right, excellent. We're going to go ahead and proceed. Let's move on to the standard risk disclaimer as required by our government and regulatory bodies, the CFTC, the NFA, and the SEC. If you haven't familiarized yourself with the risk disclaimer, please take a moment and read through it quickly, and if you'd like a copy, I can send it to you after the presentation is over. Bottom line, there is risk in trading. Do not trade with funds you cannot afford to lose, and always consult with your CPA or tax advisor before trading personal funds. Okay, let's get to the fun stuff. Who am I? My name is Silas Peters. I am the founder and operator of seasonalswingtrader.com. As the name suggests, we specialize in trading seasonal patterns using technical analysis, and we trade all markets, futures, options, stocks, and forex. A little bit about myself. That is me at my alma mater in front of Bryant-Denny Stadium with my two pride and joys and also future cheerleaders at the University of Alabama. Roll Tide. After graduation, I spent some time in the heart of the financial district at the Chicago Board of Trade, working for an institutional trade desk, executing, managing trades for our hedge fund as well as other banks, institutions, and professional floor traders. I've been involved with owning and operating broker-dealers, equity trading desks, futures clearing firms, and auto trading. Also spent some time in asset management, managing fixed income and equities for private trust clients and private family office clients as well. So that's a little bit about myself. Feel free to reach out if you want to say hello. This is my trading desk. I've got 14 monitors, a laptop, a desk phone, and 2 cell phones, and 1 yellow notepad. Just kidding. That picture is from the internet. My trading desk is nothing like that, nor that elaborate. I do use 3 monitors for looking at trades and trade setups and managing positions, and then I have 3 other monitors that I use for work and operational day-to-day tasks. Paralysis analysis. Are you a victim? Paralysis analysis, per Wikipedia, is the state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. Type a 1 in the chat if you are a victim of paralysis analysis. Type a 1 if you are a victim or have been a victim of paralysis analysis. See lots of 1s. Still a victim, was a victim. Victim, 111, victim. Well, good. The purpose of today's education is to remove you from being a victim of paralysis analysis. If you like where you are in that particular situation, then more power to you. I have been there and done that and have the t-shirt. It is not fun. There is a better way. There is a better life. There is a better way to trade. So I found out through several years of trading and working with traders and clients and gurus and mentors that I've always fallen back to the KISS principle and just downright keeping it simple. Now, I am self-admittedly an indicator junkie. I love charts, I love indicators and the latest whiz-bang features, but at the end of the day, I always resort back to simplicity, the basics, and what has worked over decades of various market conditions, and I feel that it generally just makes my life easier and causes less stress for me and my loved ones. So what do you trade? You trade stocks, ETFs, options, futures, either the index futures or the commodity futures, forex, cryptos. Let's go ahead and see what the crowd is currently trading. Stocks, options, futures, stocks and ETFs, options, futures, forex. Got one crypto guy in there. All right, great. Well, that's very helpful. Well, what we're going to learn today is that this methodology and this indicator works on anything. Any of these markets you currently see on this list and or trade, this method and this indicator that we will take a look at together works on any markets and any time frame. Using a little bit of common sense, wouldn't you say that if a methodology or an indicator is so great, it should therefore work on all other markets? Would you agree with that statement? Okay, good. Now, there may be some obscure things that work on cryptocurrencies or the forex markets or any of these others that may only be specific to that particular underlying or that type of market due to various nuances. But generally, overall, looking at a daily chart on any instrument, looking at an intraday chart on any instrument, you should be able to apply that same quote-unquote system or method or indicator on any market and or any time frame, and you should still see similar results. And that's exactly what we're going to look at today. Okay, more good news. What I'm about to share today, we'll get right to the meat here shortly. Highly accurate, profitable, that's pretty important. Works in all markets, works in all time frames. My favorite, 99% mechanical and simple. S-I-M-P-L-E, simple. What makes this different? No balance sheets required, no listening to CNBC, Fox, or Bloomberg. Historically reliable and repeatable patterns and setups. Everything taught today can be implemented immediately after the session is over by new or seasoned traders alike. You will want to throw all other indicators away once you see the simplicity and accuracy of this pattern. And simply put, these methods and strategies are not going anywhere. Go back, and I encourage you after the show to look back at various markets as long as you want, and you will see them set up time and time again. Why are you here? To learn my #1 chart pattern for trading seasonality. Disclaimer, you do not have to incorporate seasonality into the setups. You can trade the setup naked, if you will. However, I do like the double confirmation aspect of trading it in conjunction with seasonality, or vice versa, let seasonality clue me in on a possible setup and confirming with that pattern. This training includes how to trade high probability seasonal setups that are historically reliable and accurate, they're powerful and repeatable, and they're based on technical and seasonal analysis. Here's what you're going to learn during this training: how to look for profit opportunities in just 15 to 30 minutes a week, how top traders, institutions, fund managers, commercials, and hedgers are able to make money year after year, how to remove the emotion from your analysis and keep things simple and objective, how to achieve market-beating returns without being a guru. My big promise to you, this will be fun. You will enjoy taking an unbiased approach to the markets, learn to diversify, take long and short positions, trade stocks, commodities, and currencies, or options on any of the above, and again, newbie and experienced trader friendly. The setup is the 1, 2, 3 pattern. The 1, 2, 3 top, the 1, 2, 3 bottom pattern. Is anybody familiar with the pattern? Yes, yes, no, 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 yes. All right, there's a pretty healthy mix of yeses and nos. Good to see. All right, so this is nothing new. Nothing new in the markets. But this is absolutely my #1 bread and butter trade setup. In fact, this setup since October 2016, Seasonal Swing Trader has issued 102 commodity trade alerts. 85 of those 102 were based off of the 1, 2, 3 pattern, equates to approximately 83%. 60 out of those 85 were profitable, equating to a 71% profit factor rate. And since October 2016, those patterns alone have generated $115,295 per a 2-contract basis. Let's get to the meat of the setup. It's sometimes referred to as the ABC top or ABC bottom. It anticipates a change in the trend from up to down on a break below the #2 or the B point, or anticipates in a change in trend from down to up on a break above the number 2 or B point. Generally speaking, the more bars it takes to complete the pattern, the bigger the move. Confirmation of entry is on a break or close above or below the number 2 point, and we'll show you how to improve that accuracy here in a moment. Again, to keep it mechanical, exit strategy number 1 is the distance between the number 1 and number 2 points. Exit strategy 2 is taking profits at the 50% retracement level. So here's a chart example on a 1, 2, 3 top pattern. This is a daily chart of the Australian dollar. Notice that the number 1 point was put in at a 52-week high. Prices moved lower to establish a number 2 point. The market then rallied but failed to make new highs, i.e. did not take out the number 1 point, which then made our number 3 point. Once we see the market move down through the number 2 point, that is the trade trigger or trade entry. Initial risk goes above the number 1 or number 2 point, and your profit target is the distance between the number 1 and number 2 point. In this case, 159 ticks or points in the Australian dollar. That's $1,590 per contract in the CME 6A futures contract, and that reached the profit objective in approximately 20 trading days. Here's a 1, 2, 3 top pattern in the 5-minute S&P. I know that there are some day traders here. Notice that the S&P put in a session high, creating the number 1 point. Prices moved lower, found support, creating the number 2, moved back higher, could not take out the number 1 point. We then had a potential setup here with a short trigger below the number 2 point around 24.15. The target on the trade was 7 ticks, and it looks like it met that objective there in about 10 or 15 minutes. The 1, 2, 3 bottom, it's going to be the same principle, the same concept, but inverse. We have a 52-week low here on the daily lean hog chart. Price put in a number 1 point. We rallied up, put in a number 2 point here at 67.35. Came back down, forged a higher low, which gave us our number 3 point. We then traded up and through the number 2 point, giving us our entry price. We simply measure the distance between the number 1 point and the number 2 point. We stretch that out, put resting limit orders here, and that market was filled for a gain of $2,950 per contract. Here's a weekly chart on Apple. No, everybody likes to trade Apple. A weekly chart here on Apple. We have a 1, 2, 3. Notice that the number 3 did not take out the number 1. This is also a double bottom here. We take out the number 2, and we know before we enter the trade what our risk and target levels are. Once the trade is triggered, we have contingent orders or OCO orders to take us out of the market once we reach this area here, or if the market moves against us to get out here. It's a 1-to-1 risk-reward ratio. However, when you have the ability to trade multiple contracts, that is where you really have the ability to scale, because you can take your initial batch off at a 1-to-1 risk-reward and then trail the market using trend lines and other techniques to capture additional gains. Now, if you remember me preaching earlier that this setup works on everything. If it works on one market, it should work on all markets. Pips, if you're trading the forex market, Pepsi, pot, that is actually potash, but if you're trading marijuana or cannabis stocks, it should work on that as well. Personally, I haven't looked at those. Pork bellies, actually a market no longer traded in the Polish zloty. And to reiterate, and on any time frame, as we just looked at a few chart examples, tick, 5-minute, 15-minute, hourly, 4-hour, daily, weekly, monthly, yearly, and if there's anything past that, it probably works on that as well. Any trading style, futures, options, stocks, and forex, whether you're a scalper, day trader, swing trader, or position trader, and works on any time frame. Okay, you have seen the proof. Let's view some live examples. One thing that we haven't touched on is how we like to trade this setup in this pattern coupled with seasonality. So let's dive right into the charts. Somebody throw me a ticker, throw some symbols, any market. Let's take a look. Okay, Rodrigo said, let's take a look at corn. Absolutely, Rodrigo. Thank you for participating. Let's take a look at corn. This is a daily chart on corn. This is the July corn contract. First thing you're going to notice over here on the right, this window is our little seasonality tool that we have incorporated within the Thinkorswim platform. I'm sure other platforms have similar features to this. I can't vouch for that, but this is the Thinkorswim platform. So what we want to do is go to the top right hand corner, go to the 3-line sandwich option, select it, then go to Style, then come down and select Chart Mode, and you can see I have seasonality. Don't know what the heck a monkey bar is, but I've got seasonality checked, and that is what you are seeing here. So first glance here, the red line is the seasonal price average pattern. This aqua or turquoise line is going to be the current price action. So this gives us a first glance of what we know historically, what prices have done from a seasonal average price perspective. Now, also knowing what I know about the corn and grain market, I know that there are two prime time setups to trade these markets based on seasonality. I'm sure everybody is most familiar with the seasonal pattern that appears in the summertime from, say, May, June, and July, where we typically have a topping pattern. And then another good opportunity to go long is after those markets have been suppressed, after the summer tops have put in place and have worked their way down. We look for buying opportunities in August, September, October, November area, somewhere in the fall to winter months. Turn our attention back to the daily chart here, and let's see what occurred last year in the summer months. And lo and behold, you can see this chart is marked up because it's something likely that we took. We have a 1, 2, 3 top pattern that occurred in July. Notice that we had our typical and expected seasonal top put in place in mid-July. We worked our way down. We came back up. We failed. That gave us the number 3. 1, 2, 3. This is going to be our entry area here, and notified by the stealth signal that we broke on that particular day. We broke out. We came back up, as will typically happen, and then bust back through the price. Now looking over here at our seasonal price averages, notice what happens here in this June, July time frame. We chop around and then we trade lower into the fall. So once this pattern was flagged, we already know we already have predetermined target and risk objectives for the trade. Our initial risk on the trade is up here above 417. Our entry is at 380. So we're looking for about a 40-cent move, which would take us down to 340, right? The difference between 420 and 380 will take us down to 340. There is literally a half a dozen different ways to take the trade. You can short the corn contract, symbol ZC, 50 cents per penny. We're looking for 40 cents, so 40 cents times 50 is a $2,000 move in corn. You can short the mini corn contract, which is 1/5 the size of the full contract. You can buy puts. You can buy a put spread. You can sell call spreads up above the market here. You could trade the corn ETF, CORN. You could short the ETF outright, or do the same thing. Buy puts on the corn ETF, buy a put spread, sell call spread up above. However you want to play it. Personally, I like shorting the futures and or using futures options. They're going to be a little bit more liquid than the ETF. But notice that once we got our second breakthrough, we worked ourselves down. We came down to 344 and some change, so we didn't quite meet our 340 price objective. We traded sideways for a bit, came down, tagged 340, and then immediately reversed. Well, look what happens here in November. What did we say we know about the fall months? Is that we typically find a bottom in the fall months for a leg higher going into the fall and winter months. Well, we had a new 1, 2, 3 bottom. This is a relatively small 1, 2, 3 bottom here. We have a 1, a 2, a 3. This is a number 1 point of around 336, a number 2 point of around 346, and a number 3 point here at 340. The profit objective is the difference between the 1 and 2. 336 to 346. That is a 10-cent move, or $500 a contract. If you had resting limit orders or resting stop orders to get long above the break of number 2, you likely didn't get filled, or you got a terrible fill due to this small gap. Not to fret, we had multiple times to re-enter. Notice that we came back and retested. We retested here and we retested here. Notice that the red lines here, they plot your profit objective, plots the target area. So this was filled, the profit objective was already tagged once. Here's, if you got in here or again here, you're taking profits here in January up at the 356 level. Now, the beautiful thing, as I mentioned earlier about trading this pattern, is the ability to capture even larger moves. So once you have the bottom confirmed and the topping pattern in play, you can draw a trend line out into the future, connecting what we call the 3-bar trend line. Again, we don't know what price is going to do. We've already taken either full profits off at our first profit objective, or we've taken profits on partial positions and are now trailing the market, hoping to lock in more gains. When we're taking off at profit objective number 1, we're moving our stops up to break even and letting the balance ride. So let's scroll forward here using, again, we have a trend line coming out here to 365. Again, we don't know what price is going to do. Here we have another minor trend line, and you can simply trail your stop below these swing lows that are put in play against the trend line. So we have a stop here at 356, which was our first profit objective. We trade higher, we come back down. 366 puts in another pivot low. We trade higher. We know there's a possibility that this gap will be filled. We could move our stop just below that gap here at around 370, and it's likely would have been stopped here around 370 or so, although we continue to trade higher up into the 4-cent level. So that's where it becomes discretionary, is where you manage and how you manage that last batch of risk. But that is almost a textbook 1, 2, 3 pattern coupled with seasonality in the core market. We have time to take a look at a few more. Pamela said look at Disney, D-I-S. Okay, we can do that. Not sure what Disney does historically from a seasonal perspective. Looks like we have some good buying opportunities here in January to February with a trade up to May before we get a little bit toppy. Top out again here at the end of July before we trade lower into September, and then we have potentially another buying opportunity into the winter months. So let's see what was flagged, if anything, on Disney over the last year or two. We come back here in time. Okay, here's our first pattern in Disney. Looks like we have a 1, 2, 3 top in play. Looks like we were trying to put in multiple 1, 2, 3 tops during this over a period of several months here. We couldn't quite get a confirmation. We were pretty strong trend higher here. We broke the number 2 a couple of times, but you can see that it never confirmed, and its prices continued to go higher. Here we have somewhat of a channel. Notice that we're just staying range bound in that channel, and then we come and get a new high here in May of 2017. This gives us our number 1 point. We come back down, we're working lower, we're hunting for a number 2. We get that. We come up for find a number 3, which is confirmed. And then that would be a short below 109. So we have a high at 116, a low of 109. That's $7. So we're looking for a price of 102. So we break down here, we come back up, retest the breakout level, looks like about 3 times or so. Again, we're looking at 102. The action to take, short Disney. If you have the capital, buy puts, buy put spreads, or sell call spreads. You can be as aggressive as you want. You can sell at the money call spreads, similar to being short the underlying, or you can sell out of the money call spreads. And make sure you give yourself enough time to let the trade play out to its fruition. So this was the last 1, 2, 3 setup. You can see the red line here is the breakout level. This red line here is our target level. We trade lower to sideways. We work our way down, come back up. It looks like one more time here before earnings. And then what do you know? We come down and reach our 102 level before trading sideways and then breaking down lower again. Okay, let's go back and see if there are any other trade setups here in Disney. Okay, here is another trade on Disney. This is in, looks like February or March of 2016. What did we say from a seasonal perspective that we like for Disney? that we bottom out here in the early parts of the year, January, February, March, for a trade higher at least into May. We have a new 52-week low put in place here at around $86. We trade higher, put in number 2 point around $96. We come down, put a number 3. So our difference here is 86 to 96, another $10 move. So we're looking for 106. We're looking for a trade at 106. We break out, the price breaks out here on 3-1. We trade a little bit higher. We come back down and retest that breakout area and hold. We can now get long Disney by buying shares, buying calls, call spreads, selling puts or put spreads, and we're looking for 106. 96 plus 10 is 106. We're trading sideways. We come up, and what do you know? Again, we hit 106.60, 106 and some change. This is our target area. Hits it almost to the tick, and then falls back down and trades sideways. Okay, we've got time for 1 or 2 more symbols. Roger says the yen. Absolutely. 6J, the Japanese yen. I don't put too much weight in seasonals and currencies, although there certainly are. You can see this is kind of a choppy mess from a seasonal perspective. We have topping patterns here. Looks like we have a pretty reliable topping pattern here in June, and then again August, possibly a buy here in May. So let's see what happens here on the chart. And folks, I don't know what the chart is going to pull up. We're all looking at this together in real time. So here we have, looks like we've got lots of potential setups. Here's a small 1, 2, 3 pattern in the Japanese yen. We've got a high here at 86.30, a low at 84. We'll call that 84.30, looking for a 200-point move, which is $2,500 per contract in the full-size CME Japanese yen contract, 6J. So we're looking for 82.30. We come down and make a low of 82.09 before reversing. It's a $2,500 move in roughly, I don't know, 3 or 4 or 5 days. Not bad for government work. All right, we're moving. We've now taken out this old number 1, so we're forging higher, looking for a new number 1 point. We don't get confirmation here, don't get confirmation here. Looks like we get a trade set up here. Again, pretty small 1, 2, 3. We've got highs at 92.90, lows at 91.30. What is that, 160 point move? So we deduct 130 ticks from 91.30. That's going to take us to the 90 even level. We get the breakdown below here, and lo and behold, our low is 89.55. That's good for a 130 tick move in the yen times $12.50. That's $16.25. It's $1,625 per contract. Now, there is a mini yen contract traded on the CME futures. You can also trade FXY, the currency shares ETF, trade FXY. Forex traders would be buying the US yen cross pair. Here we have another setup. 1, 2, 3. This is a 94.85, 93.20. We come down, hit our target, so on and so forth. Notice here, we had no retest here before spiking higher. This is technically not a 1, 2, 3. This was flagged because of this wide range bar, but it ended up working anyway, although it took a little bit longer time to materialize. All right, one last market. The S&P, I was waiting for somebody to ask to look at the S&P. S&P on a 15-minute chart. Okay, we can do that. And let's see what we've got cooking. Let's just move this back here and we'll move forward and look at some setups. So here's a trade that's kind of occurring in the late European session. A 1, 2, 3 15-minute chart. For those trading in the early AM or trading over in the UK, we have a nice little setup here. Highs at 27.86, lows at 27.83, looking for a quiet 3-point move or $150 per contract down to 27.80. We get that, we trade higher. Here's an end of day setup in the late New York afternoon session. We have a 1, a 2, a 3. We have highs here at 27.95, lows at 27.90. We're looking for a 5-point move. We get the breakdown, looking for a trade down to 27.85. We get that right there into the close. There are a couple of additional setups here, again in the early AM. We've got lows at 27.82, highs at 27.87. It's a 5-point move, looking for 27.92s to trade. So here we break out, we come down and retest, we come back, reach our target at 27.92, and then again, all before lunchtime, we have another 1, 2, 3 top. Here, the high is 94, the low of around 90. It's a 4-point move, so we're looking for 86s. We break down, we reach our 86 profit objective, and we call it a day. So we're able to grab 5 points here early in the morning, another 4 points here in the afternoon. That's 9 points per one lot in the S&P, or $450 a contract. Not bad for a few hours of work. So I think you get the point here. These setups occur time and time again. Again, it's not rocket surgery, but the point is, would you like this semi-automated? All you have to do is enter the trade. The indicator and the scanner find the setups for you, plot your entry point, plot your exit point. You know where the risk is, and to me, that is about as black and white as it can get. So I hope you enjoyed looking at those setups with me. So let's ask the question, is this training for you? I don't know. You would have to ask yourself that. Is this indicator and training for you? If you are one that likes to pour over hours and hours of modules and hundreds of pages of literature and PDFs and need to know all of the algorithms and calculations behind something that drives a particular indicator, this is probably not for you. If you want a 99% black and white mechanical system, if you want a simple system, if you want a profitable system, and most importantly, something that can be repeated over and over again on any markets and any time frame, this is probably for you. So here's what I can do for you. Learn to spot these patterns and trade like a pro. As a special thank you for attending this session today, you can get the 1, 2, 3 high-low scanner and indicator, plus the following bonuses: my chart pattern principles PDF manual and trading guide, a chart pattern cheat sheet, my 25 top option strategy trading guide, and VIP email support, a truly unlimited value. I am a normal human being just like you, looking to extract money from the markets. I enjoy working with my clients and happy to help wherever and whenever I can. We're in this thing together, trying to create a living or additional income for ourselves and or our loved ones and families. So here's what I have for you today. The 3S code, a one-time payment of $177 US. Again, that's a one-time payment, non-recurring fee. You get the high-low indicator and scanner, currently available for the Thinkorswim platform and in development as we speak for the TradeStation platform. We expect that to be ready in the next week or so. Also, you get the chart pattern principles manual and trading guide, a PDF manual consisting of over 100 pages detailing the 1, 2, 3 setup plus other high probability patterns for trading stocks, futures, and options. Get my chart pattern cheat sheet, a handy desk reference resource for the highest probability chart patterns that occur on a daily basis, plus my top 25 options strategy guide and resource manual. And don't forget, with this offer, you get continual VIP email support as well as any new upgrades that we may make to the indicator and scanner for the life of the product. The offer link here is www.seasonalswingtrader.com/code. You should see that there on the slide as well as in the chat area. Again, that's www.seasonalswingtrader.com/code. $177 one-time payment. Can easily recoup that with one trade in the early morning hours, and you will be all set to trade this pattern alongside myself and other seasonal swing trader members. Again, I want to thank you for your time here today. It's truly been an honor to present to each and every one of you. I hope that you learned something new or perhaps rediscovered something old so you too can start seeing favorable results to your bottom line. So I hope everybody has a great rest of the day wherever you are in the world. Take care, stay seasonal, and we'll see you on the inside.